A very warm welcome to all of you. And I now hand it over to the esteemed moderator of this session, Ms. Ragini Bajaj Chaudhary. It's over to you.
Great. Morning, everybody. So it's a nice, cozy group here. Requesting all of you to come in front so that we can have a little bit of more engaged discussion. So the objective of this session today is that we are going to deep dive in some of the data which CRIF HiMac has on personal lending trends and MSME lending trends. And I have two experts who have a lot of experience in lending, and we want to make this sort of an engaged sort of, we will look at data, we will get responses from our experienced panelists, but we would also like you to come in at any point if you want us to stop on a particular slide or ask more questions. Because it's a small group, let's take advantage of that and make it sort of very interactive. Yeah? So before I hand it over to Ram, just by show of hands, what is your sort of guess about consumer lending? Where is it growing faster? Tier 1, how many of you think it is growing faster in Tier 1 cities? Show of hands? No one thinks that, okay. Tier 2 cities? Okay. Tier 3? That's fantastic. Our audience is absolutely on the go, Ram. So I think you can get started and, So great, big round of applause for our audience. You did a good job in guessing what Ram has to say.
We have a very small audience, Ragini, so the good point is that we can talk. You can have some mic, if somebody can have some mics down.
Yeah, we have an extra mic actually. I'm going to just hand
So
it
we can
over.
make it more engaging rather than...
Please feel free to come in. If you want to go back to any slide, please take advantage. And all of you sitting behind, you can come forward. And anytime you have to leave, feel free to leave. So don't be embarrassed. Come in front. Go ahead. Sure. Let's look at some data, deep dive on data, and then...
Thanks, Ragini, for setting the context. My name is Ram. I head sales for CRIF HiMac India. And today we have put together some data and insights on the inclusiveness in financing that India is experiencing, predominantly to do with the consumption lending, and we'll also touch upon how it is happening on the MSME front. Right? So we will use multiple paradigms to see this. The first one would be in terms of, is India being more concentrated on the traditional markets, or is it moving beyond the traditional markets, right? And what kind of acceleration of credit is happening in the smaller cities? That is one kind of direction in terms of inclusiveness. That's one paradigm that we would see. Second, we are trying to see, is the lending ecosystem biased in terms of rolling out different products for the smaller cities? It is the inclusive thing. Are they wanting to go more in terms of the secured way, looking at the risk in it? That's the second paradigm. We'll show you some data cuts on this and discuss further. Third, within the smaller cities, is the lending ecosystem looking at the cream of the smaller cities, or are they driving smaller ticket loans as well? Right? That's the third perspective we want to see. New to credit, obviously, it's a very important inclusion that we're looking at. How is the new to credit happening, and which geography it is higher and which geography it is lower? Something that we will look at. Not to mention gender inclusion. Is there an improvement in this direction in terms of inclusiveness? Finally, inclusion in MSME. How is the growth of the micro segment and specifically the smaller segment is behaving is another perspective that we wanted to give you. So this is the overall contours of where we will go and try and answer some questions on that. So this, we are looking at the Indian lending landscape of the consumption lending. So when we say consumption lending, we are talking about home loans, gold loans, personal loans, consumer durable, two-wheeler loans. and auto loans, right? That's a consumption lending space that we're looking at. What we see here is this, a 15.8 lakh crores of disbursement happened in financial year 20, right? And that in financial year 23 is 29.41 lakh crore. So the consumption lending pretty much has a robust growth story, almost double, 86% growth, right? And where is this growth coming from? Which kind of products is actually contributing to this kind of a growth? In terms of disbursement value, 3 products, which is home loan, gold loan, and personal loan, contribute to almost 87% of the disbursement that is happening in the consumption lending. And this concentration, to give you the context, has increased from 81% in FY20. Sorry, just 1 minute. Can you have this presentation displayed on the TV, please, because the panelists will be able to see them? Yeah. Sure. Should I wait for a minute, or you'll do it? Sure. So, again, the summary of this slide is heavy growth in terms of consumption lending, driven by home loan, gold loan, and personal loans, right? I think Ragini left the cat out of the bag, so I'm going to skip this question. So what we see is, when we saw the consumption lending is predominantly driven by 3 products, which cities is it growing? And one key trend that we observe in FY 2023 is that the BT 100, I want to introduce this term to you so it's easy to do, beyond the top 100, right, which is smaller cities. BT 100 we are talking about, a set of about 512 cities grouped as BT 100. The smaller cities now are showing very significant disbursements in FY23. In fact, the largest disbursement has happened in the beyond top 100 cities, which is 33% of the overall disbursement, right? It's noteworthy to see here, in the top 8, it is 32%, though very marginally. Beyond top 100 cities is now bigger than the top 8 cities in terms of consumption lending. That's a significant direction in which it is going. And the second thing is in terms of the rate in which it is growing. So if you look at the growth from a BT 100, from a 4.69 lakh crore, it's moved to 9.59 lakh crore, which is 100% growth, almost 2x growth in the BT 100 cities. Of course, top 8 is also going, but the acceleration is definitely faster here, right? So the key takeaway here is in terms of inclusiveness, I think Indian lending is moving more towards beyond the top 100 cities, BT 100 cities, and at a very accelerated pace than any time before. Now here we are looking at what kind of products are being driven to this top BT 100 markets, which is the smaller markets. What kind of products is dominating there? How is it growing? So we have looked at, again, all the consumption lending products. And we see here, except for auto loans, where the growth, so this is FY20, the percentage of disbursement that has happened in each of these tiers. And we will always focus throughout this presentation on the bottom, the orange one, which is the smaller cities, indicating inclusiveness here. So here we have about 34% and 33.5%, so flattish proportion of disbursement in terms of auto loans. But barring auto loans, if you look at consumer durable, you look at gold loans, two-wheeler loans, your PL, and also your HL, the proportion of disbursements that is happening in the BT 100 cities is going up, right? It is across all products. It is not skewed to any one particular product. Now I want to come to the ticket sizes. Okay, all the products are being pretty generally distributed in the BT 100 cities. But is there a focus on a particular ticket size? Is there a particular ticket size growing more faster than the other? So here, in terms of home loans, below 35 lakhs, indicating the affordable segment, and then we have 35 to 75 and 75 cities. What we see here is, again, growth on each of these ticket sizes is the highest in the top BT 100 cities, that is beyond the top 100 cities, smaller cities, that is where the growth is highest. So below 35 lakhs is growing at 43%. It is growing at a 149% and a 200% and greater than 75. This is also something we need to notice. It's a higher ticket size in smaller markets growing at a 2x pace. In terms of gold loans, again, we see whether it is below 1 lakh or above 1 lakh, definitely there is growth in terms of the top 100 cities. And in terms of ticket sizes below 1 lakh, a vast majority. So it's a dominantly driven by the smaller cities, BT 100 cities. The same thing with greater than 1 lakh as well. So if you look at gold loans, predominantly is thriving on the BT 100 cities, and it is growing faster than any other segment. Auto loans, here we see 193% growth in greater than 10 lakh ticket size and a 35% growth in below 10 lakh ticket size. So in both spaces, it is growing at a category highest growth rate. However, in terms of the below 10 lakhs, it is dominant in, the most dominant disbursement is happening in the BT 100 space. Personal loan, consumer durable loan, we see the same thing. The trend across all the products is same, if I can summarize, except in consumer durable, the growth rate of more than 50,000 loans is not as high as any other product. So in fact, it's the slowest growing ticket size segment in consumer durable if you're looking at beyond 100 cities. Beyond 100 cities, consumer durable is getting predominantly driven by below 50,000 ticket size. Two-wheeler is a completely out and out BT 100 story, which is small ticket, the smaller sizes story. Below 1 lakh two-wheelers, again, dominant in the BT 100 cities. Above 1 lakh also is dominant, so across ticket sizes, if you look at the growth rates, it's class dominant growth rates in the BT 100 cities. So if we can follow the story, it comes out to be very clear that the beyond the top 100 cities, the smaller cities is gaining momentum across products, across ticket size, and more so in the smaller ticket sizes. Right? Now, what is happening to the new to credit borrowers? This is what we're looking at. Across, inclusiveness is definitely increasing. If you look at it, in 2020, in top 8 cities, about 10% was new to credit. It's increased to about 13.7%. Similarly, across in 9 to 50 states, 51 to 100 states, it is, cities, it is increasing. But the highest penetration of new to credit is coming from the BT 100. So the more we talk about inclusiveness into the smaller cities, the more the new to credit population will get served. Right? This is again a quiz for us. Which product has the highest proportion of NTCs in the consumption lending? Is it consumer durables, gold loans, or two-wheelers? So anybody for consumer durables?
Raise your hand if you feel consumer durable has the highest proportion of NTCs.
Okay, gold loans? Okay, and two-wheeler loans? Not bad. So we are looking at on the two-wheeler. Two-wheeler is predominantly an NTC-driven market. A very, very high proportion of NTCs is there in the two-wheeler. So close to about 60% of the disbursements that is happening, and it's consistent over FY20 and 23, is happening in two-wheelers. So that seems to be a dominant one. And then there is growth in terms of NTCs in consumer durable, gold loan, and PL as well, right, across. Except for auto loan, there seems to be a shrinkage in terms of the proportion of disbursement that has happened to NTCs. This is one point that I wanted to speak in terms of the how the lending ecosystem can leverage this kind of data to gain more confidence in terms of lending to the smaller cities, more informal segments, right? What we have done is, of course, we can do a deep dive product-wise, but for the sake of summarizing it, what we've done is we've taken all the consumption product in one basket and looked at how 12 MOB 90 plus is moving, which is from origination, the 12 months after origination, how the delinquencies are looking like, right? What we see here on top is the top 8 cities, which is having, if you club all the products together, it is having a higher delinquency than the rest of the cities, right? It is coming out to be very evident. What is also important is top 100 plus, which is the BT 100 cities, smaller cities, is having a delinquency which is much range bound between the top 8 cities and the rest of the cities. And recent trends, if you look at it, there is a downward slope in terms of delinquencies, credit quality performance improving. So it is not only a heavily growing market across all products, across smaller ticket size. The credit performance is also very, very encouraging for India to be more inclusive in smaller markets. Gender inclusion, I'll briefly touch upon to give you an idea of what it is. What we see is 25.8% of women borrower in the top 8 cities in 2020. It has increased to 28.9. The growth in the gender inclusion seems to be slightly slow, but still directionally, if you look at across cities, whether it is top cities or the bottom cities, there is increase in terms of gender inclusion, right? And definitely there is more scope in terms of the BT 100 cities to go high on. If you look at both BT 100 and top 8, the penetration, women penetration is lower. Financing to women is lower than top 9 to 100, right? So, as a proportion, it is coming down. Actual disbursements have increased. So actual disbursement has not increased. As a proportion, it has come down. So there is sufficient growth, almost in BT 100, if you look at it, close to about 104% growth was there, if you see. So in actual terms, the funding to women borrowers has increased. But as a proportion, it has come down, right? Yes, sir. No, in this is consumption lending. We have not included MFI. Otherwise, it would be very skewed. We have not included MFI. Yeah. So what we are saying is, to summarize the consumption lending before I can get into the MSME briefly, and then we can open the discussion to the panel. So one, we are saying credit flow to beyond top 100 cities has become very, very critical for India because the portfolio quality is good, the market size is good, and it has potential for all the products across ticket sizes, right? In terms of performance and NTC penetration also, it gives a lot of way for inclusive finance the more you move to smaller cities. Right? So it's a very compulsive growth trajectory. It is not a choice anymore for India. It is already moving in the direction. In terms of MSME landscape, the size of MSME credit in India, and this we are talking about the portfolio size, is 26 lakh crore. And I'll just take a minute to explain to you how, from a credit bureau perspective, we look at MSMEs. So there are different repositories in a credit bureau. One repository accepts data of loans given to entities, and the other accepts loans given to individuals, right? So this side of the data that you're seeing is loans that is given to entities, akin to formal enterprises, right? Which has a trade name, which has a GST registration, more formal enterprises, right? 26 lakh crore growing at a 13.9% rate of growth year on year, right? What we need to see, and this is a true sign of inclusion here, is if you look at the individual side, which is the consumer side, these are very informal entities or individuals or very small mom and pop stores, which is being funded for the purpose of business. The size of this portfolio is actually bigger than the size of portfolio that is sitting in the formal space, right? So what we see, we all know MSME is extremely underpenetrated as we speak in India right now. But the way formalization is happening, the portfolio that is given to the informal segment of MSMEs, which is more of the inclusive finance, has become more dominant than the flow of finance to the formal segment. Okay? And they're also growing at the same rate. It is also growing at the same rate in terms of the AUM. Now, you look at that's a portfolio side of it. If you look at the disbursements now on the individual side of the MSME, which is the smaller informal segment of the MSMEs, in Q4 FY23, we had highest disbursements from Q1 20. So it really peaked in terms of disbursement, 3.4 lakh crore disbursed in that quarter. And the general trend is that it is growing. Financing to the smaller informal entities is definitely picking up. What you see here is in terms of value of disbursements in lakh crore. And here what you see is the number of loans that are disbursed, right? Obviously, you see hills and valleys here, thanks to the pandemic and the lockdowns, but otherwise, it is a growth story all through. Right? Sorry. Now, this is a very interesting slide that gives more confidence on the MSME segment. What we have done is we have taken the top 10 industrialized states. And I want to bring your attention that we are talking about individual MSMEs, which is more of informal segment, right? In the top 10 industrialized states, if you look at it, from Maharashtra leading the pack to UP and then all the way to West Bengal, the difference between the size of Maharashtra and UP and Tamil Nadu is not very, very contrasting, right? Unlike the formal segment of MSME, if you go to the formal segment of the MSME, Maharashtra is at least 4 times bigger than the next state, right? And UP is the 7th state when it comes to formal MSMEs. But the informal MSMEs where more inclusiveness is happening, UP is figuring as number 2. And it looks like it has potential across all states the minute you go to inclusive finance, right? This is the growth rate we are talking about. Very pertinent to note, across the states, there has been growth, very double-digit growth across the states. And origination volume also, there is a growth across, barring Karnataka. Do we have 2 more minutes? I can wrap this up, yeah. So here, we're talking about delinquencies here, which is PAR 31 to 180, compared between June 22 and June 23. This is to give you a sense of, okay, there is robust growth, both in terms of number of loans disbursed, the volume of loans disbursed, but is the portfolio behaving well, the way we saw in the consumer lending? It clearly appears that across states, without an exception, there has been a drop in the delinquency. Some states have a higher delinquency than the other, but in June 23 compared to the previous year, same time, there has been a slide in delinquency across all cities. So that's a very positive confidence for lenders to be indulging in the informal segment financing, right? And again, this is another way to look at from the Bureau's lens. Is it really inclusive finance in this segment? 90% of the loans originated are below 10 lakhs. So it is indeed going to the very, very small individual mom and pop stores, the Kirana stores and kind of entities that we're looking at. With this, if there are any questions I can take or open the floor to the panels.
Thank you.
Thank you.
Thank you. So great. I think we are seeing some clear trends, and it would be great to get views from the practitioners here. So Siddharth, I'll begin with you. Give 1-minute introduction to your company and then see if the trends that you're seeing on MSME in terms of top states, loan size, and spread, do you see that playing out in your portfolio as well?
Yeah. So I'm Siddharth from Rupify. Rupify is a fintech. It's actually an LSP which works with a bunch of lenders. So we lend to MSMEs, and when we say MSMEs, these are very small business owners, mostly 99% proprietors, and specifically in few verticals, let's say FMCG, small kirana shops, agriculture input retailers, pharma, etc. And we basically finance their purchases. We don't disburse to them. We disburse to their sellers actually, right? So it's a very end use case defined financing. And the trends are it's very similar to what we see
Are
in.
you able to hear, all of you? No? Yeah, can you bring the mic closer?
Okay. Is it better? Yeah. Yeah, so the trends that we saw in the consumer side, it's very similar here. We have like 30% NTC and almost 40% within 1 lakh limit ticket size, right? And we see similar trends in terms of geography as well. There's a high growth in tier 2, tier 3 cities as well. And in terms of portfolio quality also, we don't see a lot of difference. It's very similar, right? So in that sense, the trend is very similar.
Is reflected, yeah. Shurveer, would you like to comment on both MSMEs and the personal consumer lending segment?
Sure. So, hi, my name is Shurveer and I represent AU Small Finance Bank. I take care of Swadesh banking with AU. So practically our success story, Ram and Ragini, how AU has emerged in last 28 years is because of strength of these markets, right? We started in beyond 100 markets and that was the strength, the growth, since 1996 when Sanjay started AU. At that time, typically liberalization had just happened. The kind of economic activity which we are seeing today, this was a similar, transformational activity which was happening for these geographies during that period of time. And in 2000, it got excited. So are typically larger product segments where my experience gets related toward data points. And any which ways, these data points are something which all the lending institutions have done throughout their journey, right? So the trends have to be similar, but I'll tell you, like, for example, one of our strongest product or the first product was Wheels, which was basically starting from 2-wheeler to 22-wheelers. But typically we were in the livelihood financing, like we were financing vehicles which were generating income so that the guy was able to pay his EMI from the income which he is able to generate. The vehicle gets mortgaged or it's typically a collateral, but at the same time, in 2000, the trend was that the accessibility of this finance was not available, so the interest rate didn't matter. Like, for example, today, what is happening with MFI, because the interest rates still don't matter to the customer because the excess is not so much available. So the same thing was there. So we were able to price the risk. But, in these segments, the excess, you'll not find income tax returns or CIBIL scores or CRIF scores. Now, obviously, you have a lot of data, but still, this was at that time when so you have to do touch and feel, assessment of income, lending, and all that structure. Similarly, the same customer allowed us to get into another product. Now that is a story, because the second product which we started was micro business launch, which is again today a 20,000 crore book for us. So our vehicle customer, for example, he took a pickup and he was using that pickup. Then he came to us and he said that I want to start a atta chakki. So can you lend to me? Now, that was again a very, thought process that if I can lend him a vehicle through which if he is earning and paying his EMI, why can't I lend him for a atta chakki where, he will again earn through it and pay back. So our larger focus always remained on those two products before we became a bank. And then once we became a bank, we are also doing gold loans, we are doing, personal loans also. We started credit cards 2 years back. We were the only bank to start credit cards in first 5 years of the journey, but again, a lot of distribution of credit cards, majority distribution is to these markets, and that too new to credit. Now, the experience there, for example, like what Ram said, that are delinquencies better? Yes. AU is known for the pristine asset quality. Now, that is also because of the customer segment in these markets, because there you will not, if you have assessed the customer well in terms of his intent to pay, right? Not the ability, but if the intent to pay is there, then practically you will not see a default. So what we call in AU is that we work on a doctor-patient model with such customers, and in geographies, that is the best way to work, if you ask me, because if you have, at the time of assessment, you have assessed that his willingness to pay is there, then it is only circumstantial situation that he is not able to pay. So if you work with him, if typically if you have lended to a farmer and the rains were not right or if the product produce is not good, so if you can give him more time, can you work around with him? And if it was a shop owner, somebody has, or the proprietor has died, then the family, how can you help them? Is there an insurance and structure? Then the delinquencies are always of a high quality, you can maintain a good amount of portfolio quality there. But the ability to pay is dependent on for what you are lending him.
Right.
Like for example, in our micro business loans, if I have assessed him that will his business model work there in that market, will he have sufficient cash flows? So it means that typically the asset should do well in that geography, right? But yes, he can go through a personal problem. He is typically a customer which is vulnerable to life cycle issues and stuff like that. And obviously over a period of time, the insurances and all those things have helped maintain those qualities. But you will see the same trend in these geographies on the same customer segment. But yes, for us, obviously, this is the segment which has allowed us, AU, to build ourselves and grow ourselves on the asset side. And it is a fantastic space to work in. And with the kind of economic activity which is happening today and the amount of finance which is being, the throughput coming into these geographies, there's a lot of excitement, aspiration, growth. So it gives you a great opportunity to work in that segment.
So, could you also comment on what do you feel about the growth in the personal loan segment? Because you assess them on the business, which is good. You can see. But do you see any trends there? Is it more aspiration than ability to pay? What is happening? Because if you see some of the products, more than 10 lakh loans in vehicle is increasing. Consumption loans in less than 50K is. So, do you see anything on the ground? Is there anything to worry about at this moment? Because consumption lending,
recently, respected regulator has, indicated to all of us that, we want, as an economy, we want to be cautious on the personal lending side, and the trends seem to be at a regulator space. But at a individual lender side, though we are very small on a personal loan space because we just started after we converted to a bank. Unsecured is not our, we are just building it up, right, as a segment. So credit card is a segment, personal loan is something which we do for our ETB customers, which means a customer is my liability customer or a asset customer, then I pre-approve him basis his banking with me and I do personal loans to that segment. From a trend perspective, portfolio quality perspective, customer aspiration perspective, I don't see a challenge as of now. But one thing, from a theoretical perspective, or from an industry perspective is something like when we talk about microfinance as a section, right? These days, everybody will say that the concern is that one consumer having loans from multiple financiers, right? Now, if that happens on whether it is a BT 100 or whether it is top 8 cities, if that is happening to any, so from an inclusive perspective, I believe that the urban poor is much more excluded as compared to the rural poor, because there's a lot of work which has been done on rural poor, but the urban poor still gets neglected into the entire subject. But your urban poor is able to access to these personal loans and through these apps, fintech solutions and various things, and they've got multiple access to it. Now just I'm giving you a perspective of my personal experience with some of the people in Bombay, Jaipur, Delhi, in cities who are urban poor. Like for example, people who help us on a daily basis, like whether my doodwala or whether maid and my driver and everybody else. Now the point is, typically what will be his salary? Any person like this, he will be earning around 15,000 or max to max 20,000 rupees a month. If through a way, and these are vulnerable to any of the financial needs in their life cycle, right? Sometimes it's education, sometimes it's health. Health plays a larger problem, but majority will still not have health insurance, though the government schemes recently have helped a lot. But now if he is in need, he needs money. All these tech solutions today are available to provide him money on tap.
Yeah.
Right? And on that base of salary of 15,000 or earning of 15,000 bucks, he takes one loan from one fintech today, tomorrow from another, third day after, fourth. Typically, if he's able to accumulate a loan value of around 75,000 odd, do you think he'll be able to pay back that money?
No.
So the ability to pay will become a problem.
Right.
And then eventually it will lead to a concern. So I think one of the trends which, we need to be cautious about is that too many people lending to too few people, though there is enough opportunity in India, right? At the pace which we are growing, and there's enough population, and there's enough need. There's actual need of inclusive finance reaching to right people. But in this competitive situation, if too many people lend to too few people,
That could be a
that could be a challenge.
So you want to come in here?
Yeah,
before I
sure.
ask the next question?
So I think very good perspectives, quite a few I learned from what you said, Shurveer. So in terms of the performance of personal loans, especially since you asked, and I gave a very aggregate view of how the entire consumption lending is growing, it was a picture of sliding delinquencies. But if you look at the product-wise and within the product ticket size-wise, they're not very homogeneously sliding, right? Personal loans, especially if you look at it in the last 2 quarters, is showing a slight increase in terms of delinquencies, and rightfully,
Loan for you would be
it's unsecured personal loans.
unsecured,
Yes.
not home loan, not
No. These are, I'm not
Yeah.
talking about consumption loan. Overall consumption loan is good. Within the consumption loans, the personal loan segment of it. So, and that is also behaving differently for different geographies, different ticket size segment. So that's something, sort of a recalibration I think would be required.
be required.
With RBI making it a little more expensive for banks to lend on the personal loan space, and effectively it will land on the consumer with a higher rate of interest. If the volume or the bottom line is decreasing, then it's a double whammy. That's something that we need to
Yeah.
recalibrate.
You want to come in and ask a question? Could you please, yeah.
To your point on the sub 10 lakh delinquencies, because I think there needs to be a little more granularity in the way we look at it, because it's adversely affecting the segments that actually really need it. What does your data show? Is there like the point that you made in terms of rural, urban, and, geographies, etc. Are you seeing, or is there a particular segment that is behaving, badly and therefore skewing the whole portfolio? I think that's very important, because now everybody is taking a stance that, less than 10 lakh is not worth, and, that's got a massive impact on, and especially women, which is the segment that probably looks at it more. Can we have a little more nuanced view on that, please?
No, but I don't think that less than 10 lakh is a space which is being, not being attractive. It is one of the most attractive spots, and for us, like, as a SFB, we have to operate in a space which is less than 25 lakhs, right? And these are ticket sizes which allow you to build granularity, like you said. The point is that which product, right? Your question is also relevant, which segment, which product. So product plays an important role. Like, for example, if you talk about gold loan, it will always be in, sub 10, it will be around sub 3 lakhs kind of a level, right? If you talk about two-wheeler, it will always be in the same space. If you talk about micro business loans, typically if it is an unsecured micro business loan, then it should be in a space of 3 to 4 lakh rupees, right? Because that is the actual need. Beyond that, then you are actually funding for his aspiration and personal consumption and not for business consumption, typically in that space, right? Now, it is an attractive space because you are able to price the risk. But the question is that how are you able to assess the willingness to pay and ability to pay, both. Willingness to pay in terms of he is not an intentional defaulter, right? And that is the strength, I think, for us, we have built over last 28 years and to do that. But that is an area where people should be cognizant about, cautious about how they are building it. I don't see typically that just because this is a low ticket size segment, it is a cause of concern. The cause of concern can be specific products. Like, for example, if you are just doing unsecured personal loan, where the end use is not typically defined or there's no cash or cash flow linkage to it. Because if you are not able to lend basis cash flow or understand the cash flow of the customer, if there is a mismatch, it will default.
No, that I understand. But what does the data actually show? This worsening of trend, where is it? Is it indeed in the segment that he's talking about?
So we're talking to, I would like to distinguish these two things. One is on lending below 10 lakhs on the MSME segment. Is that what you're referring to?
Yeah.
Okay. In the MSME segment, as Survi rightly said, we're not seeing a stress per se in the smaller this thing. If you look at we have done studies where we've broken the segment into micro, small and medium and across geographies to see if there is any nuanced insights that we're able to get. But the way you saw across the states, there is decrease in delinquency when compared to 2020 and 22 and 23. Even across micro, small and medium, there is a slide in delinquency across all these C segments. Micro has always been a slightly higher delinquency when it comes to the smaller and medium. However, the slide or the improvement in the credit quality has been the sharpest in micro. So I'm not seeing any, and I'm also able to agree with Shurveer on, I'm not able to see any specific stress in this segment.
And how do you
from
see the
data.
personal segment? Is that amplified? Because why is there so much of amplification in the media about the less than 10 lakh and cautioning from the regulator, etc.?
That is to do with the personal loan segment.
Loan and the loan app segment.
Yeah,
the
it is more with the personal loan segment that is, and I think to an extent, the data as I showed in the recent 2 quarters, there is a slight increase in the delinquencies that we see. So there is.
And there you see some nuance there? Is there a rural-urban?
See, again, if you split that into tier-wise, though even for the BT 100 cities, the smaller cities and the top 8 cities, there is a slight increase in the delinquency in the last couple of quarters. The lowest delinquency has been in the smaller cities.
I see.
And smaller cities is a heavily personal dominated. And since we interact with a lot of lenders, many of them don't share the sentiment of it is becoming risky yet. They're still gung-ho, mostly when I speak to,
That's a relief to hear. Thank
yeah,
you.
whether it's a public sector bank or a private sector bank and an NBFC, they're still gung-ho about the space.
Yeah.
So can I bring you in, Siddharth? Because your loans are less than 1 lakh or less than 5 lakh. Do you see any nuanced, data on their performance, even on FMCG or agri or anything?
Yeah, I think Shurveer partially answered that question, right? So here we are also not giving loans which is consumption-led or where end use case is not defined, right? So we are giving credit for their purchases. In fact, we know for sure that goods will be delivered, etc., right? So we don't see that, we don't see any increase in stress or risk. And to add to that, what we have seen is a good uptick in number of new NTCs coming in, and the way we assess them is basically their purchase history, and since how long have they been purchasing with the particular seller, etc. Right? So that gives a very good confidence and the intent to pay.
So basically you remove the fungibility of money. You pay,
Yeah.
you can't use it for any other purpose.
Yeah.
So I think one of the interesting points which Ram made in his slide was on how the uptake of women borrowers is increasing, right? So it was like there is an increase, but of course it's not as much as we would like. So what has been your experience, Shurveer, and then of course I'll come back to you.
So, from a inclusive finance perspective, if you go historically in last 20 years, this has been the space where everybody has tried, right? Because that is where the core concept was that if you are able to empower women, then it will improve the quality of life of the household, it will make them more stronger, independent, the health, hygiene will improve, and eventually the livelihood will improve. So, all MFIs or all NBFC MFIs and the categories of SFBs, today, they have all typically targeted this segment from a larger perspective. But you have to see this segment in the also context of socio distribution, right, overall. Like, for example, in the state of Rajasthan, a women entrepreneur ratio was itself very low.
Very low.
Right? So, but is it improving? Yes, the trend shows that. So, are the number of borrowers growing in my book? who are women entrepreneurs? Yes, they are. And typically in my micro business loan segment, it is a very important, consistent segment. Second, not only, we are just talking about lending, but from an inclusion perspective, also important is the liability side of it, right? Now, this is again a very attractive segment for all banks on the deposit side, because this is where the stability of money is higher, and also it allows you to build a strength from a inclusion perspective, that women is able to save for her emergency needs, and which was typically used to be in her grain dabbas, have moved to a bank or not. There's a lot of work which has happened, a lot of work which needs to be done, but definitely this is one of the most aspirational segments, and the way, the education, literacy, and if you will see direct correlation of education or to the matter literacy into the state and geographies, where you'll be able to see the participation of women in the borrower percentage in the state, that distribution is clearly visible.
Someone has raised the question. Yeah, please go ahead. So for people who came in late, we made this session more participatory. So you can come in and ask a question anywhere, anytime.
Sir, good afternoon, sir. My name is Bhaskar Chakravarti, GM from Canara Banks. Yes.
Yeah, please go ahead.
Sir, some question before to Mr. Ram. And this FI index, FI, financial inclusion started during 2014. At that time, it seems the FI index around about 28% as per FI index given by RBI. Now, as on yesterday, latest, it is almost 60.10% FI index. Last year, it is 56.40% FI index. Within a year, there is so much increase of FI inclusivity in India. What my perception, I am telling, sir, as the FI index is rising, Indian economy is also taking off. Maybe you might have observed.
You're right, sir.
Correct, sir? So I want any deep dive analysis of FI index with reference to increase in GDP and Indian growth. One thing, sir. Second one, you told this over a period of time, the contribution of MSME loans, retail loans, consumer loans, inclusiveness across various sectors, geography, and you mentioned gender, NTC, ticket size, all those things. Whether this increase has been contributed by which sector, sir? Whether is it MSME, retail, or this one? In PMJDY accounts, any study is there, sir? How many of PMJDY accounts are coming to MSME enterprises and retail availment of loans? This is my second question, sir. Third one, there is apprehension by RBI, and of late you might have seen some measures to tighten personal loans. But you are telling delinquency is coming down in all the sectors. But RBI says there is apprehension that this delinquency level is going up. That's why they tightened up.
Yeah.
So I want your call on these three things.
So I will answer your third question first, sir, because it's relatively simple. I have covered it. On the slides on the credit quality performance, or the 12 MOB 90 plus that I showed, it is how the early book is behaving at an aggregate level for all consumption loans. The slide that I showed you is for all consumption loans put together, not specifically for personal loans. And I also, while answering ma'am's question, I said if you break that down into different products, in personal loan in the last 2 quarters, we are seeing a slight increase in riskiness. And that further, if you break it down, personal loan across tiers, in top 8 cities, the increase is slightly higher than the BT 100 cities, which is the smaller cities. So that's why I said personal loan, yes, RBI is making a noise. They've started quite some time back, and now they made something very tangible in terms of how it will impact the cost of funding for these funds. But there are early signs that we are able to see in terms of 12 MOB 90 plus in the personal loan space, especially not in the smaller markets, but in the larger markets. So that's the third question. The second question, sir, was about... yeah. Sure, we can take it offline on this.
Sorry for
It'll
this, I've
require a
just
little
been-
longer answer, and sir, I would like to reach out to you and give you some data point and
We'll
statistics as well.
definitely take that time too.
And just on the first point, we haven't done any correlation studies on that yet, but it's a good suggestion, sir. We will look into that.
So, in interest of time, Ramesh, can I get back to you in like 2 minutes? I just want one question to be answered, and then I will just open it up. So, I have to cut short. So, there are two things I want you to respond on. One is, are you seeing any climate risk playing out on your portfolio? You can just say yes, no, maybe later, whatever. And what are your top 3 trends as you look at the lending?
So let me qualify your first point on the climate risk. When you say climate risk is a broader subject, right? If you talk about natural calamities, yes, on every portfolio in lending, natural calamity will always play a, if there's an earthquake or if there's a flood, it is going to impact, right? In the geography it happens, definitely, but the duration till the time that stress will remain will depend on the type of the climate. But another perspective of climate change, if it is related to increasing temperatures or, what we globally talk about, or climate financing, or if we are talking about green financing or as a subject, as a bank, any which ways, we recently launched a green deposit, the first one in the industry, which is compliant from a regulator perspective as a product, and we are committed towards building that book for green financing. So that is to support the overall climate change perspective. But if you ask me practically that today, because of the climate change which is happening on that side, is the impact on the portfolio and all, practically that is not going to impact now, right? It might be around 20, 30, 40 years. But yes, a natural calamity, any which way, is going to impact that particular geography for a particular period of time, the kind of calamity is.
Sure.
Trends, for product-wise, there are different trends which you keep seeing. But yes, there's a lot of, we all know the GDP numbers, the latest inflation numbers, we know things seems to be great. We are one of those economies which is doing well in these difficult times, though there are socio-political issues, geopolitical issues in different parts of the world. So, but with the kind of consumption and growth story we have, the aspirations of rural and semi-urban India are also high. The monsoon has been fine. The crops are fine. So the consumption and growth seems
Let me reframe my
good.
question. What will you, top 3 things you will say to a lender who wants to get into BT100?
Okay. So,
Googly.
no, so it's simple. One, understand your customer. Don't be in a hurry. Understand your customer, because it is a customer which might become vulnerable. This is a segment where you have to understand and work with the customer on the ground to build your book. Second, yes, there is a definitely high demand in this area. This is huge segment, right? Because India is a diverse geography. So everybody has a space to work on. And third, I think you have to be cautious about that you are not getting into a zone where multiple lenders are lending to the same customer.
Yeah, to the first question about climate, impact of climate. So in short term, I see that we actually have apprehensions around short-term climate changes in agri-input sector, not so much in other verticals, let's say FMCG, FMCD, etc. Longer term, we don't have any view as of now.
Sure.
Yeah. For trends, there are 2 highlightable things, right? So one is there's a lot of education around credit, right? So most of the businesses have been availing credit, some sort of trade credit with their distributors, with their brands, etc. I mean, with this formalization of credit, there is a growing awareness, right, that there needs to be discipline of repayment. What is the impact if they go delinquent, if they delay their repayment? That's one. And the second is, as I said, right, I mean, more NTC people are coming in this formal credit space, which will lead to have more history of their credit history. Right? That's going to be a big thing.
Ram, you want to say something?
Sure. On the climate change that you said, so CRIF is actually globally looking at environment sustainability. So basically, certifying businesses on the level of practices that they have for environment sustainability, which in turn has a climate impact. But in India, I think it is pretty much till the time it becomes mandatory or there is a benefit behind driving it, it is going to be a slow adoption in India. Today, many businesses which is engaged with multinationals, the multinational expects not only the large business and also their supply chain is environmentally sustainable practices is being followed. So such certifications are coming in suit in India and CRIF is helping businesses to do that. I also see going forward from the perspective of the financing space, it can lead to cheaper finance when somebody has a environment sustainability, this thing, the way it is there in the European markets now. On the top three trends, I kind of mirror what Shurveer and also mentioned, Siddharth mentioned. So it is, BT100 is a compulsive story right now. It's not a choice, right? That is where the opportunity is. We're able to see it is behaving much better. So I think lenders are already going in that direction. But I think a calibration of risk is required between the type of products, ticket size, and the customer segments you want to do. Because we're able to see some slight differences in different places. So these are two key things that I would see.
Thanks. So Ramesh, I'm coming back to you, but keep it short, please.
Yeah, my question is short. I am very uncomfortable with the characterization of consumption versus productive lending. I believe if somebody has the intention to pay back and the ability to pay back, all the lender needs to do is to assess that and lend them money. I'm very uncomfortable as long as I have the ability and money to pay. If I come to you with a need, if you assess me and you think I'm credit worthy, you give me. And I'm uncomfortable with the regulator coming out and flagging these loans because there are a number of people who, I mean, it's so difficult to classify one as consumption and productive. So that's the point I'm saying. You sitting on judgment, on value, on what is consumption, what is productive, there may be an emotive reason why I want a loan, right? And if I have the ability and intention to pay, why not I get it?
So I think the onus is on lenders to evaluate well. Go ahead.
No, I completely agree with you, Rameshji. At the individual level, what you're saying is right? If I have ability to pay and if my intent is right, I should have access to finance.
Exactly.
Unfortunately, still the financial ecosystem is product oriented, right? Because when you have to do mass distribution, you have to have processes and products because to have that distribution effective. But I'm sure with the digital orientation and the adoption which is happening from the customer side as well as the bank side, this will change over a period of time that, I think with the kind of, if you see the digital kind of loan journeys, they are self-DIY kind of journeys and stuff, over a period of time and with the amount of data available, this process will change. But from a distribution perspective in India today, for people to understand that, how to assess both the ability to pay and the intent to pay, you need to have a product constructed.
Sure. Thank you.
I
That's
think the
well taken.
lenders needs to be more responsible and sort of not chase growth.
Ragini, we are trying to be responsible, right?
course, I'm
And
not
we
saying
are
no.
responsible. Don't blame lenders, right?
No. What I'm saying is your second point on the trend, advice you gave, that know your customer and grow responsibly. That's what I'm saying. So if you evaluate well, you cannot grow very fast.
No, that is one of the core philosophies to build a very sustainable financial ecosystem.
Exactly. So with this, I want to thank all the participants. There is a question? Okay.
Hi, I'm Shreya.
I'm not being approved, but you can go ahead, please.
Sorry. I'm Shreya. I'm a business journalist. I just wanted to ask if you have any data regarding value generation through the MSME loans that you are offering. What I mean is, do you have any data that's along the lines of for every 1 rupee you lend, how much value in the economy or how much value the business is generating?
So you mean to say value in terms of revenue, profit, or
Just value, maybe contribution to GDP, but if not that, then value in terms of profit would be good if you have that data.
profit revenue? Hard to, what would be your take on that?
No, so data, Shreya, data availability is there, right? Because typically how much loan is we are doing and repayment. But the fact is, if you ask me offhand, do we have it right now to share with you? That will not be shared. But I'm sure CRIF can do some data study and give it back to you over a period of time. But the fact is, I'll give you a ballpark thumb rule. Okay? Now, typically, if I'm lending to any micro business person, whether suppose I'm lending 3 lakh rupees to a guy, what is the assessment? The assessment is that can that guy pay a EMI? Right? Now, typically, if that person is able to pay a EMI of 20,000 bucks, then the fact is that he will definitely be earning in a range of 50,000 rupees a month. Now, how is he earning? Because micro business loans typically are business generation loans, right? You are not funding for personal consumption. You are funding there for business generation. So, if that money which you have lended, that money is being deployed for business activity and he is able to generate 50,000 on his investment of 20,000 rupees, that is how you can correlate that. But yes, I'm sure CRIF will be able to provide you more data on that offline. Yeah.
Sure.
Thank you. So thank you, panelists and audience. You've been great. Thank you so
Thank you.
much.
Thank you, Ram.
Thank you very much.
Feel free to reach out to them individually if you have some unanswered questions.
We thank the esteemed panelists and thanks Ragini. We deeply appreciate you taking out the time to join us and moderating this session. It was really enjoyable. May I request you to kindly accept a small token? May I request the team to kindly present a token of appreciation to the esteemed panelists as well as the moderator. Thank you for making it a very engaging and very good discussion. We enjoyed it all. So ladies and gentlemen, we now take a break for lunch and we come back for the next technical session which starts at 13:30, that is 1:30. And before we break, once again a gentle reminder, we have introduced a web app. You can scan the QR code and access the schedule as well as network with other delegates. And please don't forget to fill out and submit the feedback form. Your feedback is extremely valuable to us. So please try and scan the QR code. It's on your M badges as well as on screens. You can see it now. See you after the lunch break. Please do try and come back. We would like to start the next session at 1:30. Thank you. Looking forward to meeting you all again after the break.